Hello lads, how are you doing? I hope you all are doing fine. Last week we saw the King Dollar was attacked by all sides but resisted. And right now I have clues, data and facts that EURUSD is in course to parity. Is that what we have on the menu today? And of course all the analysis in the other majors. And so before we start, please don't forget to subscribe and hit the like button, this or this side. Okay, so let's go. My friends, last week we discussed how the positions for USD, the non-commercial positions was stretched, and not just stretched but was already on peak, on all-time highs. And this week things are even stretched, and I think I have clues and facts that makes me believe that we are about to see a big pullback, and not just a big pullback, but I think we are exactly at the top on EURUSD, and we are about to see maybe 2000 pips movement to the downside, what will bring the USD to parity. So let's take a look on this. First thing that is important to notice is where we are right now. Okay, so if you take a close look, we see that we have about, but exactly 185,000 contract longs. And if we go here and filter, we will see that this is the huge amount of contracts right now until this date. And another interesting thing to see is what happened before in the past when we had this, and what is about to happen right now. Okay, if you remember past week I talked about the importance of also open interest, this field right here. This is how much open contracts we have in the pair. And if you look here in this, the bottom of the chart, I'm going to play all. We are also on top here too, and also and trend usually changes when we have a peak on open interest, and we have a big peak right now. So I think we are about to see a big thing happening. So let's go. Let's see this. I already marked it on the chart the last time this peak happened of positions on EURUSD. So let's just take a look. Let's make a draw. I think you believe in cycles and patterns. So check this with me, how amazing this is. This movement right here. Okay. Let's just do this. What about this? We can even be more, I can even make a better draw. Check this. I don't know if this was a better draw. Okay, but let's move this here. Let's zoom out. So this is what I'm talking about parity. So it's not going to happen today, but the predicted day is in the end of 2022. But as I told you, I think we are on the peak. This is a top for USD, and I think we are not going to see price going above it. And it's incredible how this this pattern is happening, is repeating. See, this is amazing how this is repeating. Check this. It's pretty interesting. So right now I am super bearish EURUSD, and I think the next stop. Let's do this again. Let's do this again. So the next stop where I think we are going to see some sideways is exactly this place that we saw in the past here. So we are talking about this level right here. So let's say we are talking about 1.15 and 1.13. So I'm going to short from here. I don't like to take positions on Sunday or Monday, just on Tuesday, and that's because of Monday high, Monday low. That's one interesting thing Said, Trader SZ, teaches, and I think it's pretty accurate, so I use it too. So you know the trading plan for EURUSD, you know the reasons. If you haven't read the Forex weekly report, I suggest you to do the reading, because there I shared this. Let me show another clue that I have for what make me think that we have more downside. I don't know if you have heard about half-life. Half-life is how long it takes for a price or a series to move from below the average and make all the cycle and go below the average again. And I calculated this for EURUSD, and right now we are still on a bullish cycle, and this is telling us that we are going to still on this until 15th of September. And so remember this date, that 15th September. And if we go here to seasonality and check what is the most similar year to 2020, we are going to see that it was 2009. And check when it was the peak. The peak was on September. Can you see on the bottom right here? The peak was on 29 September, just 10 days after this. And if we go right here, we are going to see that after the peak, the price didn't fell like a hammer, but the price went sideways for about 9 weeks. September for now is about 9 weeks. So that's it, friends. I really think that we are on the top, and a short from here is we have 100 pips of risk against 1000 pips of reward, 2000 pips of reward. So that's it. Let's move to the other one. The other currency is Australian dollar, but this time I would like to comment Australian dollar and New Zealand dollar, both. Just one comment, because they are doing pretty similar stuff, and they have also another things that are doing the same movement. First thing, you all know by now that Australia and New Zealand have highly correlated economies, and we can see this on this chart of AUDNZD. This is a weekly chart. So since 2015 they are trading this range. So no economy, nor Australia, neither New Zealand can overcome each other. So they just change. One time one's better, another time another one's better. And if we look to what this is Australian dollar, okay? Check how the positions, how non-commercials are positioned. Can you see here what they are doing? Now let's take a look on New Zealand. It's practically the same thing, the same stuff. And also if we look, for example, let's take a look on seasonality for Australia. We are going to see that for this time of the year, Australian dollar usually trades side hedge. So can you see this black line is 2006, and we can expect prices going nowhere until the start of September. And if we take a look for New Zealand, we are going to see a very similar behavior. Can you see right here? Okay, the price started on 5.9, and until November we have 2% of until November we have only 2% of variation. After that we have a big drop. And another thing before I'm going to tell you how you should trade this. Take a look on the seasonality for Australia. This is on top of non-commercials net position. Can you see from where we are now to the end of the year, nothing happened. So what we must expect is that this chart, this behavior right here that we are seeing on their net positions sideways, this will remain to the end of the year. So we are not going to trade, of course not, we are going to trade, but we are going to trade the ranges. First thing that we must notice is that right now USD dollar is trying to make a pullback because then on the past days, can you see this strength? This is not just Australia, this is USD dollar losing power, and right now we dollar wants to do a pullback. And this 3-week setups was triggered on the weekly, and what this tells us, when we have these 3 weeks, one greater than the other one, what we're going to do, we're going to expect the breakout of this line 0.70, and then we set our stop loss on the high of this candle that is forming right now, and we are going to place our target right here. But after that, what we have to do is to play the supply and demand zones. Okay, so how do we identify it? That's simple. We just come here on technicals, supply and demand, and we can type here, or we can just go here, and for example we filter for distance, and we're going to see the points, the supply and demand zones that are closer, so we can trade it. Okay, and or we can just go here. Let me just open another chart so we don't lose the draws. AUDUSD. Okay, we have this indicator, nice indicator right here that draws the supply and demands for us, so we can, for example, just place our orders to sell here, or orders to buy right here, and we wait. Okay, friends, and the same thing is true. Let me cancel this. The same thing is true for NZDUSD, that is also playing the range. And I want to show you one thing before. If you are a follower, you will remember these draws. And yes, I missed it for 1, 2, 3 weeks. So this should be here, and this line should be here. But the NZDUSD is doing this movement, and I think, for looking the data and looking all the seasonality, I think this range right here, the price will ping pong from here to here. Okay, and this is what we are going to play, and this is what I want you to play too. And if something change, you will know, because I'm going to post here on the report. But by now, nothing is happening for these both guys. Okay, my friends, so let's move to the other one. Okay, friends, let's take a look on GBPUSD. GBPUSD is one pair that is not being easy to analyze, and I'm going to tell you why. Check this, what the traders are doing. 1 week they add, 1 week they cut, 1 week they take profit, and the other one they add, and the pair is going nowhere. But what I'm thinking, take a look. This is completely different story from other pairs, and we can see that the bulls are winning this fight, and why I think this is happening? Because check the data here. Can you see how comfortable the longs are? They are doing trades. They are buying, they are selling. Why the things on the short side are a little bit different. Okay, they increased their short, but they are doing nothing. They are behaving like retails. They are waiting to the pair to drop. Eventually it can do, and I think the shorts will have their opportunity to close the positions in the next sections because of the USD strength that we are talking. But check this. I think you believe in patterns and price repeating and seasonalities, and also on economical cycles. Check how this seasonality chart, just for you to understand. Everyone, for example, if I click 2019, this blue line is, this black line is what happened in 2019, okay? And the blue line is what is happening in the current year. This red box is the year with the most correlation with the actual year. So it's the year with the most similarity. So I think it's worth us to compare. And check this, 2010. It's pretty much similar, don't you think? Looks like we are living at the same year, the same thing, the same story. And right now, what we are seeing and is expected is a big drop, as a pullback on GBPUSD. And if we go to the same year of that 2010 that we are living right now, and if we get this, that was exactly the move that was made here. Can you see? And then I get this. And this is the movement that I am expecting right now for GBPUSD. And as I told you, that eventually that shorts are going to be closed, and I think 1.25, sorry, is on the cards again, completely on the cards again. But I think right now, right here is a big trading opportunity that we should take, and I'm going to take it. But I'm not taking a position, but on Tuesday I'm going to short the pound, and with my stop loss on this level. If this candle of this week make a higher high and then go down, I'm going to use the higher of these three candles as my stop loss. Okay, that's it for a pound. So let's move to the other one. Let's take a look on USDCAD. USDCAD is one interesting because I think 2 or 3 weeks ago I talked about how this pair was becoming completely something not interesting to trade because we're seeing lack of open interest. But check what happened on the past week. Check how shorts were squeezed. They closed 38% of their positions on 7 days. This is huge. This is huge, super huge. And someone may argue, but the open interest is going down. But check how the open interest for commercials are. They are increasing. They are increasing, my friends. So this just means one thing for me, that USDCAD, where you are, my friend, right here, USDCAD, I think we are about to see a big run on USDCAD. Can you see? I think we are about to see 1.38, And if we start to see all this USD strength that I'm talking to you, and as you not just talking, but you can see how the trades against USD are being closed at a fast pace, and we are going to see some fast movement to the upside on the USDCAD. So for the USDCAD, this is my trading plan. I know this looks like some child draw this, but I'm not good with writing with my hands, just with coding. So this is the best that we have for today, okay? That's it. Let's move to other one. Okay, friends, let's take a look on USDCHF. And we saw on USDCAD that the shorts were already squeezed, and what I'm seeing on USDCHF is the shorts is about to get squeezed, and follow me with this. First thing, last week I talked like how non-reportables are playing. Non-reportables is another group from COT Data. We have non-commercials, commercials, and non-reportables that are a group of traders that doesn't fit on this side or neither do this side. But as you can see, we have the net positions for non-commercials and 12,000, and for commercials on 22,000. That means that we have 10,000 on non-reportables, also short. And why this is important? First thing, can we see how the commercials are trading? They are doing the bearish pattern. They are buying while the price is going down. But I think last week we didn't see price going down. Price was sideways. So this is the first signal that all these shorts that were added, it's not a lot, okay, but all the shorts they were added was observed by this group. And one thing that is interesting to note is the levels where these guys, the commercials, take profits. I made a draw here that's going to be easier for you to see. So all these points, this is 10 years of data, all these points is where the price reversed in the past. We can see one point right here that this was not true, but was one point in 10 years of data. And if we go to the charts, the price charts, and we zoom out, we are going to see that in about 10 years, this supported was, I'm not going to count this because this was something insane, but this support was not respected just one time. So the odds are on our favor, and I think a move to the upside is about to happen. If we saw this lower taken, we're going to see the 3-week setups that we discussed for AUDUSD triggered, and I think we are about to see a squeeze on the shorts, and the price will trend up like we're expecting a strength for USD. Okay, so let's move to the other one. But before, I want to show you another thing, how the technicals for USDCHF are. Let's see, USDCHF. Okay, so this is how USDCHF is behaving. We have RSI below 30 on daily, above the top bands on Bollinger Bands on 1 hour. On monthly, the Bollinger Bands is below the bottom band, and we have right now a bullish divergence on daily, and also a spinning top on 1 hour. That's it. Let's move to the other one. So here we go, the last one, USDJPY. This is another one that is pretty interesting, but if you do not have a trained eye, this may deceive you, and I'm going to tell you why. Check this. First thing that you may notice, how, can you see here, how aggressively commercials are playing this. This is a sign that maybe a bottom is near, and they are absorbing all the shorts because they are not really trading, but they are buying GPI or selling GPI for some reason, and they consider this a good price, so this they will buy the amount you have to sell. And check how the open interest is increasing, and check here how the open interest is decreasing. What this means that at these levels, even that they increased their shorts at these levels, it's not interesting anymore to trade short, so it's better to maybe start to close positions. And I think it's exactly what is going to happen from the next weeks for USDJPY. And also for seasonality, check how this is on top of non-commercials net position. Check how the data for 2020 is behaving pretty much similar to what happened on 2014. And if we go to the same period of the year that we are living right now, that is approximately here, we had this movement, and I think we are about to see this movement happening again. And if we see, the first impulse will coincidentally go to this liquid zone right here on let's say 112, and then we have this big drop to this price level on 180. And I already have some positions right on USDJPY. I also have some orders to trigger, and that's it. We also have seasonality and this commercial pattern player in our favor. Okay, friends, so if you watch until here, please do not close yet. I want to thank you for the support that I'm getting. Please do not close the video yet. This is something new for me. You know, I'm from Brazil, and sometimes it's not easy for me to communicate. I'm a good English writer, but speak is not something that I do often. So please excuse me some mistakes, and I'm doing my best. And my channel right now is a small channel. I have 139 subscribers, but 1 month ago I had 0. So for me, it's I'm a trader. I think in terms of percentage, this is a huge increase, and I'm really happy for this. If you're also a follower of my blog, you will remember what I talk about a trading revolution and about my idea to bring tools that was accessible to all traders and retail traders. And that was not just cheap talking. I mean what I was saying. I am a man of my word. And as you can see, the dashboard I talked about, I added a lot of tools. I have more to add. This week I'm doing an upgrade on the framework that run it. I'm also adding a dark mode. Hello, Stelios, dark mode, as you asked, my friend. And I'm fixing some stuff and making this faster. That's it. What I'm asking you is to subscribe, to share my video, and if you know someone interested in be a patron and funding this project, please let me know. Okay, my friend? So thank you very much. If you are not subscribed yet, please do it. I think it's this side or this side. And leave your like, your comment. Tell me if the report, if the videos are helping you, how they are helping you, and what can be improved. If you want to hear about another trading pairs. And that's it, my friend. I hope you all have a great Sunday and a great week of trading. And if you need some help and assistance, just look on Twitter. It's Larry Mozo. And that's it. Thank you very much, and bye-bye.